Hey, welcome to the second video about the cash flow dashboard tool. So basically just to pick off where we left with the last one is now that we have it all set up in terms of what our predictions are for the year, we're looking at, well, how do we use this as we go through the year? And one thing I didn't mention in the other one that I want to just mention again, here is the, right here, this column here, A, for sales tax. Basically, for the expenses, here in Quebec anyway, we get the sales tax reimbursed by the government, so it's important to track which are taxable and which aren't. And so by default, I've set it to yes, as in, yes, it is taxable, but some things like, for instance, labor or the money that you pay yourself has no sales tax on it, obviously. So that all is used in a formula right here to calculate how much sales tax we anticipate that we have to pay each month, and it's all tied in up in the income for the reimbursement. So it's going to calculate every 3 months how much we can ask to get reimbursed. So that's just one little nuance I wanted to add before getting into how we use this. So great, let's get to how we use it. So basically here we've set up everything, what our predictions are for the year. And in the next tab we have the real. So this is where we track what is actually happening in real time. And so here we have, this is all just automatically pulling these names and this information from other sheets. So there's no editing that really needs to be done in this sheet unless you already use something like QuickBooks or some software, in which case you're going to want to enter the monthly amounts that you're actually spending right here. So for January, farmers market sales, blah, blah, blah. But if you're not using some sort of accounting software already, there's these two other tabs here, Bank and Other, where you can basically enter expenses. So let's say that on the 5th of February 2019, you buy some seeds. Oops. Buy some seeds, and it's you pay, let's say, $250, and there's no tax on it, so you don't need to put the tax amounts. And so there you go. Basically over here in real, we can go and check, and indeed for seeds it's been added, $250 in February. So that's how you would do it. You would basically, if you're paying it through your bank account, you would add it on this tab called Bank, and if you pay it either in cash or credit card or some other method, you would add it to Other, and either way, it's all ending up here in your actual results. And so, yeah, basically you might be noticing there's some colors here, and so these are some codes that allow us to basically, at a glance, take a look and see where we're at in terms of our sales and our expenses. So for instance, let's take a look at the expenses. So here we have, for instance, in January, we spent $2,800 on seeds, and what we had planned was $3,000 right here. And so this turns orange to say, hey, whoa, watch out, you're almost out of budget for seeds. So we can look up here at the color code. Orange means you have X% left in your budget. And here I've set it to give us a warning when we get to 15% left in the budget. And then red is, whoa, the budget is done. So here we see in February, we spend another $250. And so now we're up to a total of $3,050. And we had planned $3,000. So obviously the budget is done. We can no longer buy any more seeds. So that's how that code works. The other codes that are here are the green codes and the yellow codes. So yellow means that you're spending a little too quickly. So orange and red relate really to the total amount. It says, hey, compared to the total amount you had planned, you have 15% left. Or compared to the total amount, you have only 0% left. You're done. Whereas yellow and green refer to how much you had planned on spending cumulative up until this month. So, for instance, let's take the example of labor here. How about that? So labor, if we go over to the forecast, we can see that this is what we had planned on labor. So let's go see what we planned for labor. So we had May 2000, June 2500, 2500, 3000, 2500, 2500. And so that's what we had planned for a total of 15,000. Except in reality, it looks like, whoops, in May we spent more money than that. We spent 2,600. And so that's too much. And so it just turns yellow to say, hey, whoa, you're spending a little faster than what you had planned. And so June, we're right on target, except that since we already have a surplus or, a surplus of expenses for May, it's still yellow because we haven't yet caught up. And July, 3,000, and then August, we spend less than we had anticipated. So now it offsets it and comes back down to green, which means, green basically means it's okay, but you're close. You're tight. And if it's just white, it means there's nothing to be concerned about. Don't even worry about it. And then the next month, it turns orange because we're almost out of budget. And so we see, okay, we're almost out of our labor budget. How much do we have left? So we have $1,900 left. So either we decide that in October somehow we're not going to hire, or we're going to cut back, or that we'll just go over budget. Because I don't know if you remember, but we had planned $2,500 for October. So let's say here, October comes around. So we would say, all right, so let's say on the 15th of October, this is labor, click. And let's say we're able to reduce labor costs a little bit and then get it down to 2,100. So now if we go check the real, what happened there, October, we see that, well, first of all, the spreadsheet takes a little bit of time just to load because my computer's being a little slow right now. What we see is that it pops up 2,100 and then it turns red to tell us, hey, you have totally spent all the money that you were planning on spending. So quit it, basically. And so now when we scroll all the way down, we see that the same codes apply down here to the total amount, total expenses. So this is the same codes, but in a lump sum, rather than per, where are we at? Right here. Up. So we see basically we see that even though some of the expenses are like at the limit or spending too quickly, overall we're doing good. And when we cut to October, it turns to orange because we only have 15% of the budget left. But you know what? That's normal because it's October. And so then we finish the year and we're all good. And if we look at on the side of the sales, basically the way that these codes work is a little differently. So basically here we have the legend for sales. So red means that sales are very slow, which means that they're at least 25% less than what we thought they would be as of today, as of this month. Orange means they're slow. So it just means that they're less than what was anticipated, but not yet up until 25% because otherwise it would be red. Yellow means, hey, you're almost there. You only have 10% left to really score your goal. And green means right on, you've passed your goal, you've sold more of that product than you thought you were going to sell. So let's play around with some numbers just to see how that plays out when we actually enter some sales. So here, let's just check what we had planned. For farmers market, let's say May, 4,000, 6,000, 7,500. So let's just enter some numbers to see what that might look like. So over here, we're going to say May 4th or whatever, May 31st, up May 30th, and farmers market up. And we're going to say in May, let's say that sales are a little slow. So let's say we only sold 3,500 in May. Okay? So then we go to real, and we see what did that do in the spreadsheet. So here, it's May, and we sold 3,500, and so it turns orange because it's a little slow, but not red because it's not 25% less. And so you may notice that the cells here are red, but that's normal because we're still in May. So we haven't actually entered any sales for June, July, August, etc. So right now, let's imagine that it's May, and we just look at this and we say, okay, we're at 3,500. Things are a little slow, so we need to put some action on that. And so we could also go over to our forecast and say, well, oh yeah, we had planned on 4,000, but we're actually only at 3,500. So we missed 500. So we should try a little harder, and maybe in June we'll be able to hit our target. So let's imagine that actually happens. So instead of 6,000 in June, we're going to sell for 6,500. So June, farmers market. And so now one thing is that it has to, the contents of these cells has to be exactly what's in the forecast. So you can click on this little arrow and you'll see the whole list of all your expenses and incomes. And so here I can click on farmers market. The other way of doing this is just to just start typing FAR and it'll pop up farmers market. Boom. So we said that this month, sitting as we saw that it was orange, we gave it an extra boost, and we were able to increase our sales for June with comparison to what we had planned. So let's see what happens on the spreadsheet. So here it says, okay, June was 6,500, and now it's back to white because seeing as we were able to offset that sort of like the delay that we had in May, now we're able to we're back to white because we've offset what we should have sold in May. And so that's how it goes, so on and so forth until you're almost there. And so, when it turns yellow, it means, hey, this is the final push necessary to hit our goals. And, sometimes a little bit of effort can actually make the difference between making the goal, hitting the goal, and not hitting the goal. Because ultimately with sales, it's often that last 20 or 10% where we really get our profit, right? That's where the gravy is, If you've grown all the produce and you're trying to sell $100,000 worth of vegetables and you've only sold 90,000, well then that last 10%, that last 10,000 is almost all profit, right? Because you've already grown the veggies. All you have to do is sell them, and sometimes that's easier said than done. But at least now with this tool, we can be fully aware of where we're at at any moment in the season and where do we need to put our energy. So. Do we need to put our energy on increasing farmers market sales, increasing wholesales? Do we need to put our energy on, making sure our labor cost doesn't go too high? Do we need to, where do we need to put the energy? And this is a little bit the same thing where, this allows us, for instance, to make some decisions. For instance, packing materials here. We see, let's imagine that wasn't there. Let's imagine that, instead of imagine, I'll actually go delete it. So packing materials, take that out. So just to give you an idea of how this could be used to make decisions, we could be like, okay, packing materials, we spent, let's just go back to forecast to remind you of what I had imagined in this fictitious example. Packing materials, $4,000 in May, and another $2,000 in August, for a total of $6,000. So that's what I had imagined. Fictitiously. And in this example, in May, we've spent $5,000 instead of $4,000. So it turned yellow to tell us, hey, whoa, you're spending too quickly, be careful. And now we come to August, and we're like, yeah, it's August, and we need to resupply our packing materials. And so we go down to wherever we buy packing materials, and we buy our stuff, and we see like, whoa, there's a super special deal if I buy a whole case of rubber bands. I get like 10% off or 20% off. But, all I really need is like 2 pounds of rubber bands, 2 bags. I don't need the whole case of them. But I'm like, wow, I can get a super deal on it if I buy a whole bunch of rubber bands and I'll put them in the cold room so that they don't go bad, and I'll have rubber bands for the next 3 years and it'll cost me less money, And you can look and be like, oh, shit, I'm already at yellow. I better not do that. I better just stick to my $2,000 because anyway, it's going to be